Hi, now we are going to start with next chapter, which is transfer pricing. Now you might have heard from your seniors, or you might have yourself studied this chapter before. And this chapter is like, even if it is part of international taxation, we require a different mindset for this chapter. Okay, so it is not like tax rate, equalization levy, double taxation. No, it is something different. So what is that different? Let's see. Any for any chapter or any topic or any subject, if you understand the logic behind it, then it becomes easier for you to understand the chapter. So if you just say, okay, transfer pricing 92F, 92, 92B, then 92B2, if you directly start with that, then in that case it will be very problematic. Like in the earlier one, we have done double taxation avoidance. There we studied that what is the requirement that income of ROR is taxed in other country and in India also. That's why it should not be taxed. So double taxation avoidance agreement is entered into. If there is no DTA, still India on its own gives the relief under section 91. Like that, we'll understand the logic behind this transfer pricing chapter. Now, this is generally where a person in India, it can be Indian company, Indian uh, resident, anyone, deals with persons outside India. Now, let's say there is a multinational group. Now, what do you mean by you might have heard? Okay, I want to work in MNC. What is this MNC, multinational company? It means a group of companies which are having presence in multiple countries. So let's say there is A Limited in USA, then A Limited, or in UAE it will be LLC. Here it would be A Inc. and A Limited in India. It's possible, na? This is a multinational group where there is one company in USA, one company in UAE, one company in India, and maybe this company is holding 70% of this company is holding 40% of this company is holding some 60-70% of this. So they are part of the multinational group. Now in USA, let's say for example, the tax rate is 20%, income tax rate 20%. In UAE, income tax is 0. There are other taxes like VAT and all is there, that is indirect tax, but on income there is no tax in UAE. And in India, A Limited is an Indian company or domestic company, so for that 25% or 30%. So we'll assume that this is A Limited is into 30% bracket. So now A Limited, so this is multinational group, we'll focus on this. Imagine you are A Limited of India and I'm A LLC UAE, and we are related. Maybe I am holding some percentage, 50% or more in your company, or you are holding. Anyways, both ways it is fine. So in such case, these persons are not in transfer pricing scenario. They are not called as related persons. They are called as associated enterprises. Associated enterprises means like related persons, and we are going to study today that what are associated enterprises. 92A definition is of associated enterprises, and there are 13 different categories of associated enterprises for international transfer pricing, and for domestic transfer pricing also 92BA section we are going to study. Okay, so here A LLC and A Limited are associated enterprises. So now you are A Limited and I am LLC. You will sell me. You want to sell me, and I want to purchase from you. So if you sell me for a product for 100 lakhs, then in your hands 100 lakhs will be income. For me 100 lakhs will be expense. Now transfer pricing, whenever we are studying, always we have to think from the point of view of Indian entity and not foreign entity. So what will happen in UAE? It is not there in our syllabus. As a consultant, when you qualify and you are working for a client, as a consultant you have to think from Indian entity point of view and foreign entity also, because both are your clients only, na? If it is multinational group is there, so both are your clients. So you have to think not only from point of view of Indian entity but from UAE entity also. But for our exam purpose, for applicability of transfer pricing provisions, you have to think always from the point of view of the Indian entity. So here, what is the transaction from the Indian entity point of view? It is sale. So if A Limited sells, and assuming that 100 lakhs is the entire income, means no expenses are there. So how much would be income of that A Limited? It would be 100 lakhs. And expense would be for UAE entity 100 lakhs. Now they are related, they are associated enterprises, means they are part of the same multinational group. So A Limited, what it does, it says that instead of 100 lakhs, I will sell you at 80 lakhs. See, simple. If you are running any business, if you are doing some business and you are selling goods of 100 and some relative comes and says, I want to purchase, you give some discount. Na? Why? Because it's in the family. So the sale happens in family. Here also, they are part of the same family. So here A Limited will sell, will undervalue the sales. Not because there is a relationship between them, but because it wants to reduce the tax. So instead of paying tax on 100 lakhs minus the expenses, if they are, now tax will be payable on 80 lakhs. So here, to avoid this, transfer pricing provisions have been added. Here, how much is the transaction price? Transaction price is 80 lakhs. And this 100 lakhs is called as arm's length price. Arm's length price means the price which would be applicable if the transaction was undertaken with a person who is unrelated. So this is ALP, that is arm's length price. Okay, so here in my profit and loss account of A Limited, how much should be the sales? It would be only 80 lakhs. And how much should have been? It should be 100 lakh. So can we pass entry in the books? No, now we cannot pass entry in the books. So while calculating income, while calculating business income, there will be transfer pricing adjustment 20 lakhs. And this is called as primary adjustment. 20 lakhs will be added, and of that, whatever is the income or income tax rate, that would apply. I hope you are understanding it. If it is purchase related, then also this provision will apply. So we'll write down 3 examples on this. But first, we should go through this 92b. So let's start with this. Arm's length price of a transaction between two associated enterprises is price that would be paid if the transaction had taken place between two comparable independent and unrelated parties where consideration is only the commercial. So that is arm's length price. So this 100 is arm's length price. So definition: arm's length price means price which is applied or proposed to be applied in transaction between persons other than A's in uncontrolled transaction. Means other than related persons, whatever sale price is there or whatever price is there, that is arm's length price. There are few other definitions also. I'll put them at the end of this chapter, because if I put them here, first 2 pages will go in that those definitions only, and then you will start feeling the heat of this chapter. Array, so many things are there. So whatever is lesser important will be placed, and in exam generally they don't ask define arm's length price. No, they'll give numerical example or a case study based example, and they'll ask you to find out. Now, there are 2 types of transfer pricing which we are going to study. First one is international transfer pricing, and second is specified domestic transactions, means specified domestic transfer pricing. So right now we are focusing on international transfer pricing. 3 conditions. Transaction relates to income or allowance for any expense or interest. Means it can be relating to income or expenses. I'm not reading B, C till G, we'll read that later. At least one party to the transaction should be non-resident. That is important. If the transaction takes place between us, so you are also resident, I am also resident, then international transfer pricing provisions will not apply. Then the next question which will come up is whether specified domestic transfer pricing apply. No, that will be applicable in very rare cases. ATI, there are 5-6 cases only, and generally it does not apply. It applies in case of bigger businesses because the value of transactions for that limit is more than it should be 20 crores. So in case of normal 10 lakhs, 20 lakhs and all, it won't apply. So right now we'll focus only on international transactions. So first, it should be a transaction, specified transaction. Second, at least one party of the transaction should be non-resident. And third, they should be AEs. AEs means associated enterprises. Then, in that case, we have to find out transaction price, arm's length price. The law relating to transfer pricing shall not apply in case where on application of arm's length principle, income chargeable to tax gets reduced or loss assessable gets increased. These provisions are for the benefit of income tax department and not for SSE. So if on application of arm's length price, if the income is reduced, then these provisions will not apply. We'll say that what is saying. We'll check up three cases. Write down. International transfer pricing. International transfer pricing. Case number 1. So A Limited India and B Inc. USA are associated enterprises. So what is the first condition? That it should be a specific transaction. So we have not yet written transaction. Second, at least one party should be NR, and third, there should be AEs. Now they have not given anything about B Inc. But one more point is given. Poem of B Inc. Poem is place of effective management of B Inc. is in USA. Therefore, B Inc. is non-resident. Then ALP means sale price is 80 lakhs and ALP is 100 lakhs. So here sale, now you have to think from whose point of view? From the point of view of A Limited. A Limited Indian company. It has sold goods. So goods sold in the books, how much is the income shown? 80 lakhs. 80 lakhs should have is credited. But at what amount it should be? It should have been credited or it should have been sold 100 lakhs. So here sale is undervalued by 20 lakhs. So this 20 lakhs will be transfer pricing adjustment. So when this person is filing return or when the chartered account, now in case of transfer pricing, there is this audit report under or this form 3CEB. So auditor will do the audit and he will say you have to add 20 lakhs. Assessee himself can add or auditor can add or later on AO or TPO. We have done this reference somewhere. In assessment procedure we have done that. TPO, transfer pricing officer. So transfer pricing officer's job would be to find out arm's length price. But it's not that A Limited will tell me arm's length price. No. A Limited on the basis of chartered accountant's report will find out ALP. If AO or TPO think that this ALP of assessee is not correct, then they will find out. But you cannot just sit, relax and say, okay, TPO will find out. No. So first responsibility is on the assessee and chartered accountant, and then that ALP can be changed. How to find out ALP? What are there any methods to find out that? Which method has to be applied? That we will be doing tomorrow. So right now, just basics we are doing. So A Limited sells goods to B Inc. for 80 lakhs. ALP is 100 lakhs. So here we cannot make changes to the books of accounts. So while filing return, what would be the transfer pricing adjustment? It would be 20 lakhs. This is called as primary adjustment. There is one more secondary that also we are going to study later. Yes, I'll give you time. Please go through this transaction. Think. I want I want that you should think on this. Now we have to think. Now here it is going to be in sells goods to a limited 80 lakhs, ALP 100 lakhs. So add 20 lakhs. So in that case, we have to think from whose point of view? Indian entity point of view. B Inc has sold, which means A Limited has purchased. A Limited has purchased for how much? 80 lakhs. But it should have been purchased for how much? 100 lakhs. So now I'm just drawing, you need not draw. How much is debited to purchase or debited? 80 lakhs are debited. But how much should have been debited? 100 lakhs. So if you make transfer pricing adjustment, then what happens? The income is reduced by 20 lakhs. So provisions of transfer pricing will not apply. They are only for the benefit of department. Means only additions can be made. This primary adjustment will be only addition. It cannot be deduction. So this 20 lakhs cannot be reduced. It implies that the transaction price is 80 lakhs. That is deemed to be the arm's length price. Because if you apply the arm's length price, then in that case the income will get reduced. So ideally, when B Inc is selling goods to A Limited, it should have sold at 100 lakhs. The transaction price should be itself at 100 lakhs. But since it is at 80 lakhs, that is deemed to be at arm's length. So transaction from the point of view of Indian entity, A Limited is purchase of goods at 80 lakhs and ALP is 100 lakhs. Arm's length price is 100 lakhs. Write down. If ALP is applied, if ALP is applied, then income will get reduced. Income will get reduced. Therefore, no transfer pricing adjustments would be made. No transfer pricing adjustment would be made. The transaction price of 80 lakhs, the transaction price of 80 lakhs will be deemed to be at arm's length. Transaction price of 80 lakhs will be deemed to be at arm's length. Okay, understood this? Yes, let's check up what are the different transactions given. So income we have considered, allowance for any expense or interest, means if you are paying to non-resident AE or receiving from non-resident AE, both cases it will be covered. Next is allocation or apportionment or contribution to cost or expenses. Now, in case of multinational groups, I explained you what is multinational group. It means there are in that group there are multiple companies, and there are some services which are shared. Like for example, there is HR which is shared. There are some cost which are that is called a shared cost, and that cost is apportioned. In that case also, in case of allocation or apportionment or contribution to cost or expense, this arm's length or arm's length price has to be determined. You'll say why for cost, just cost is incurred and it is being allocated. So what's tax planning in this? So we'll take same example: A Inc. in USA, A LLC in UA, and A Limited India. And there is some service which is used equally in all these countries or all these companies. And for that maybe 30 lakhs is the amount paid. So ideally how much should have been allocated? 10 lakhs to A Inc., 10 lakhs to A LLC, and 10 lakhs to A Limited. But to A Limited, 15 lakhs is allocated, and 10 lakhs to A Inc., and 5 lakhs to A LLC. Means that 5 lakhs which should have been allocated to A LLC are allocated to A Limited India. What can be the reason behind this? Since more cost is allocated to India, the profit will reduce. So in that case, we have to find out the arm's length apportionment. So it means basically how the service is utilized. Service is utilized equally. So equally it should have been allocated. So in that case also, uh, primary adjustment would be made. If 10 lakhs should have been allocated, but allocated to India is only 8 lakhs, means less allocation, expense is less, then in that case that 8 lakhs is deemed to be at arm's length. Additional 2 lakhs expense will not be allowed. So write down this third case. And all these should be A's. Now we are thinking, we have to think from only Indian entity point of view. 15 lakhs and 8 lakhs. So two situations. So how much is the ALP? Means if it was correctly allocated, then 10 lakhs. So ALP is 10 lakhs but allocated 15 lakhs. So excess allocation, excess cost allocation is 5 lakhs. So shall be primary adjustment. And here also LLP 10 lakhs. ALP 10 lakhs. And write down, if ALP is applied, means how much is actual expenditure? 8 lakhs. Means claimed expenditure 8 lakhs. If we claim 10 lakhs, then 2 lakhs extra we will claim. And in that case, income will reduce. So in such case, provisions of transfer pricing won't apply. It means 8 lakhs is deemed to be at arm's length. So write down, if ALP is applied, then income will be further reduced. Income would be further reduced. Therefore, no such primary adjustment would be made. no such primary adjustment would be made, and allocation of 8 lakhs will be deemed to be allocation of rupees 8 lakhs would be deemed to be at arm's length, would be deemed to be at arm's length. I hope you are understanding it. Then other transactions are provision of services, capital financing, borrowing, lending, guarantee. So if loan is given, so what would be transaction? Loan given won't be transaction. Interest on that would be transaction. So if interest is paid more, then in that case excess interest paid to AE, then it will be some part will be added. But if it is paid less, so we'll see problems on that. Then in that case no adjustment. Then business restructuring or reorganization which may or may not have bearing on profits, income, losses or assets, and other transaction having bearing on profits, income, losses, assets of such enterprise. So almost every transaction is covered. So international transfer pricing applies to every transaction where one party to the transaction is non-resident and the transactions are between associated enterprises. Now deemed international transaction 92B2, a transaction entered into by enterprise with a person other than AE. So let's say I am A Limited, Indian entity, resident, is entering into transaction with other than AE. So other than AE means, let's say A Limited and B Limited are A's. B Limited is non-resident. Okay. So don't write, I'll give you time to write later on. Just because this, it is play of words here. Because if I keep on reading, then you'll feel that we are getting confused in this. So here, who are A's? Sorry, A Limited and B Limited are not A's. Maybe that B Limited is foreign company. Okay, no. Wait. We'll call them as residents only. Both are Indian companies. So now the transaction is entered into by enterprise. So A Limited is the enterprise with person other than AE. So here the transaction is A Limited to B Limited. Sale of goods. So if one resident sells goods to another resident, then international transfer pricing provision should not apply, but shall be deemed to be. So this shall be deemed to be international transaction. Means transfer pricing will apply entered into between two A's if there exists a prior agreement in relation to the relevant transaction between such other persons. So B Limited is such other person and AE, or terms or of the relevant agreement transaction are determined in substance between such other person and AE, where enterprise or AE both of them are non-resident, irrespective of whether such other person is non-resident or not. So A Limited and B Limited are both residents and they are not A's. A Limited and C Limited are A's and C Limited is non-resident. So let's understand this. A Limited, C Limited, they are A's. So if I sell to C Limited, then transfer pricing provisions would apply. I cannot undervalue the sales. So what we do, you are B Limited, you are also resident. So I tell you that I will sell goods to you and you have to sell goods to C Limited. See, if A Limited sells to C Limited, then in that case provisions of transfer pricing will apply, and then there will be primary adjustment to my income. What tax planning I do? I sell to you and you sell it to C Limited, and it is already predetermined, it is already known that once I sell it, so there is a prior agreement between such other person, means B Limited is such other person and C Limited. So there is already a prior agreement that when I will sell goods to you means A limited sells to you means B limited is purchasing from A. Same goods will be resold further or after processing. So the intention of this transaction is to avoid provisions of transfer pricing. In that case, the transaction between enterprise, that is A limited, with person other than A will be deemed to be international transaction. So for this, even if you look at this transaction, that transaction does not comply with the conditions. So none of the parties are non-resident and they are not A's. Still, it will be deemed to be resident or deemed to be international transaction, and transfer pricing would apply. So whatever I dictate, only write down that much. So A limited resident and B limited resident are not A's. And A limited and C Inc. non-resident are A's. A limited and C Inc. non-resident are A's, associated enterprises. If A limited sells goods, so here basics lecture, this today's whatever lecture is there, we are clearing our basics, that if A limited sells to C Inc., then transfer pricing provisions will apply. Why? First condition, the transaction is of sale, which is income. Second, at least one party to the transaction is non-resident. So C Inc. is non-resident. And third, there is. So since all the conditions are fulfilled, transfer pricing provisions would apply. So write down, if A limited sells goods to C Inc., A limited sells goods to C Inc., then provisions of transfer pricing will apply. Provisions of transfer pricing will apply, and primary adjustment would be made. Primary adjustment would be made to the income of A limited. So now what A limited does? Therefore, A limited sells goods to B limited. A limited sells goods to B limited into bracket not AE, not AE, and B limited sells it further to C Inc. Now there is a prior agreement, means what? Before A limited sells to B limited, it is already decided that whatever goods are going to be received by B limited, they have to be sold further, maybe like that only or after some processing, to C Inc. So write down, before sale happens between A limited and B limited, before sale happens between A limited and B limited, it is already decided, it is already decided that B limited will further sell the goods to C Inc. B limited will further sell the goods to C Inc. Therefore, now write down like this. TP provision means transfer pricing provisions. Complete this. Yes. Now, what are associated enterprises? Let's check up. Section 92A, Associated Enterprises. So for international transfer pricing to apply, the transaction should be a specified transaction. Second, uh, one of the parties should be non-resident. Now sometimes they won't give that the other party is resident or not. In case of individual, they'll give the number of days stay in India. In case of foreign company, they can give that poem is outside India. You have to interpret that. And third is they should be AEs, that is associated enterprises. Now sometimes in exam a problem is asked for 4-6 marks. They'll give, if it is for 6 marks, then they'll give 3 transactions and whether they are AEs or not. Such problem can also be asked. So in our practice book, such problem is there. You can just go through that later. Okay, it's associated enterprise. Enterprise in respect of which one or more persons who participate directly or indirectly or through one or more intermediaries in its management or control or capital are the same persons who participate directly or indirectly or through one or more intermediaries in the management or control or capital of the other enterprise. Means if there are two companies, see here this 13 categories will cover that. These 2 points are deemed to be covered here, but I am just explaining. So if there is an enterprise, now instead of calling the person associate, the word used is enterprise, in respect of which one or more person participate in management or control. So there is this assessee enterprise, and there is a person who is managing or controlling this person, is also participating directly or indirectly through one or more intermediaries in management and control of other enterprise, which means this enterprise and this enterprise are controlled by one common person. So in that case, the persons who are getting controlled are AEs, or enterprise which participate directly or indirectly through or more one or more subsidiaries in management and control or capital of the other enterprise. So there is this person who is controlling this company and this company. So these are considered to be related persons. So how this management and control is there, we'll understand this by way of this 13 cases. Two enterprises shall be deemed to be associated enterprises if at any time during the previous year. If any time during previous year, it need not be like sale happens in the month of April, but this condition is fulfilled in March of that same year, then they are deemed to be AEs and provisions of transfer pricing will apply. So what are the 13 categories? One enterprise holds directly shares carrying not less than 26% of voting power in other enterprise. So here one company, let's say A Limited, is holding 26% or more of voting power. Now voting power means equity shares, or if it is a partnership firm, then the share profit 26% or more in the other company, then in that case they are A's. Now out of that one should be non-resident. So either Indian company or Indian enterprise owns in foreign enterprise 26% or more, or vice versa. It's not that only Indian should hold in foreign or foreign should hold in inter. Correct. So this is one company holds 26% or more of the voting power of the other enterprise. Let's write down all these cases. Direct question can be asked in exam, or if it is a numerical question where we have to find out primary adjustment or secondary adjustment, there they don't give that they are A's. They'll give that this Indian company holds 30% shares of the foreign company. So it is deemed to be A's. Or we have done this section 115 BBD, dividend received by domestic company from foreign company in which it holds 26% or more. So in that case, that foreign company is called a specified company. So in that case, Indian company and that specified foreign company will be considered as associated enterprises. So write down associated enterprises. Okay, write down 2 points on the top of the page. First point, write down condition of 26% or more, condition of 26% or more, comma, right to appoint BOD, etc. can be by Indian company in foreign company or vice versa. Indian company means Indian company owns 26% or more in the foreign company, or Indian company appoints more than half of the BOD and all. That can be Indian to foreign or foreign to Indian. Indian company in foreign to foreign company or vice versa. And second point, the conditions as per section 92A can be complied anytime during the year. Can be complied anytime during the year. What does that mean? If sale takes place in April of that year, but this condition is complied with in let's say January, still transfer pricing provisions would apply. Okay. So you can write one example here. These are all small points which matter. Done. Okay. Second, so we have to do 13 categories today. Second, any person or enterprise holds directly or indirectly shares carrying not less than 26% of voting power in each of such enterprises. Means there is one common person who is holding 26% or more in two companies. So let's say C Limited is holding 26% or more in A Limited and B Limited. So as per point number 1, C Limited and A Limited are related, or are A's, because C Limited is holding 26% or more in A Limited. Similarly, C Limited and B Limited are A's as per point number 1. Now as per point number 2, the two companies in which there is one person holding 26% or more, those two companies will be considered as A's. But if in A Limited C Limited was holding only 24%, and in B Limited it was holding 26%, then they are not A's, because 26% or more in each of such enterprises. There can be 5-6 enterprises in which C Limited is owning 26% or more. In that case, all of them will be considered as A's of each other. So here C Limited So A limited and B limited are A's as per point number 2. So they are deemed to be A's. So example, C limited holds 24% in A limited and C limited holds 27% in B limited. Then in that case, what would be the impact? So here as per point number 1, C limited and B limited are A's. But C limited and A limited are not A's because it is not holding 26% or more. And C limited is not holding 26% or more in A and B both. It is holding only in B limited. So therefore A limited and B limited are also not A's. So here only C limited and B limited are A's. And A limited and B limited are not A's. And C limited and A limited are not A's. But if any time during the year C limited was holding 26% or more in A limited, then in that case they would be considered as A's. Done. Okay. Let's take up next one. More than half of BOD or members of governing board or one or more executive directors or members of governing board of one enterprise are appointed by other enterprise. Means if right to appoint more than half BOD, in case of company it will be board of directors. In case of other person, like in case of AOP and all, members of governing board. So in that case, if C limited is appointing, or let me take some different name, X limited is appointing more than half of the BOD of Y limited, or one or more executive director or member of a governing board. So one or more executive director. Executive director means who takes care of the day-to-day management. Either half of the board of director or one or more executive director is appointed by the other enterprise, then they will be considered as A's. And here more than half of the directors or members of governing board, or one or more executive directors or members of governing board of each of the two enterprises are appointed by the same person. So there is a common person appointing more than half of BOD or one or more executive directors in each of the companies, then in that case these companies will be considered as A's. Let's write down. Third, So X Limited, one example, X Limited appoints 5 directors of Y Limited, total directors of Y Limited 10. In that case, are they A's? No. X Limited should appoint more than half of the BOD. So more than half would be, so 5 is half. So if X Limited appoints 6 or more directors, then only there is. Assuming that there is no other, like if 26% criteria is not there, then this criteria has to be checked. So they are not A's. S Limited appoints more than half of the BOD or one or more AD in T Limited, and same for V Limited. So as per third point, S Limited and T Limited plus S Limited and V Limited are A's, and as per fourth point, since in T Limited and V Limited there is a common person appointing this, therefore in that case this they are A's as per fourth point. Yes, I'll give you one example on this. So wherever possible, so see such things are asked in exam. And give some description and are they A's or not, like that. Sometimes, not always, sometimes. So see this. S Limited appoints 6 directors out of 11 directors of uh, T Limited. So 11 into 50% means 5.5, means more than half. So there can be 5.5 directors. So if it is 5, then less than half. If it is 5.5, then half. And if it is 6 directors, then it is more than half. Therefore, that condition is fulfilled. More than half. Therefore, as per third point, S Limited and T Limited are A's. Then S Limited appoints one executive director of V Limited. So it can be either appoints more than half of the BOD or one or more AD. So yes, due to that, S Limited and V Limited are A's. And plus, since more than half of the BOD of T Limited is appointed by S and one executive director is appointed by S in V Limited, S T Limited and V Limited are also considered as AE. So it's not that for being A's, in both the companies, S Limited should appoint more than half, or both the companies one or more AD. So in one company, more than half of the BOD, in one company, one or more executive director, that condition is also fine. If that executive director is appointed in March, but the transaction takes place in April of that year, still that condition is, they are A's because the condition can be complied with any time during the year. Got it? Yes. Fourth done. Then fifth, loan advanced by one enterprise to other constitutes not less than 51% of the book value of total assets of the other enterprise. So here, this shares are not held. One company is not holding shares or not appointing half of the director or one or more ED, but has given loan. If I give you loan and that loan is not less than 51% of book value of assets of the other enterprise, means the borrowers, then in that case the lender and borrower are related. And if guarantee is given, guarantee means what? If you want to take loan, you approach me, but I don't have money, so you go to the bank and bank says give us some guarantee. So I give you guarantee. What does that mean? If you don't repay the loan, I will repay the loan to bank. So if I have given guarantee for you, not less than 10% of the total borrowings of the other enterprise, means whatever are your total borrowings, 10% bank guarantee is given by me, then in that case we are A's. So relating to loan, it is 51% of book value of assets, and relating to guarantee, it is 10% of the borrowings of the company or the enterprise. Right on. Fifth, I hope it is done. Six done. We have seven more. Okay. Seventh and eighth are relating to. Okay. Wait. No. Eighth and ninth are. Yeah, correct. Seventh and eighth are like related. So seventh is relating to purchase. So if I am purchasing from someone, then 7th point will apply. Then in that case, I am buyer. SSC, who is for whom transfer pricing provisions are to be checked, is the buyer. And 8th is for the sale, means I am selling to someone, means here the SSC is seller and the other person is buyer. 97 point, 90% or more of raw material and consumables required for manufacture or processing carried out by one enterprise are supplied by the other enterprise or by persons specified by other enterprise, and prices and other conditions of supply are influenced by such other enterprise. Means I am the buyer now. Whatever is the requirement, raw material or consumable requirement for manufacture or processing, now this will apply only if the SSC, the buyer, is into manufacturing. If I am into trading or if I am into provision of services and for that I have purchased raw material, then this provision won't apply. So if whatever is my raw material consumable requirements, if I purchase from other person or person specified by other person, and that other person, such other enterprise, is influencing the price, means he is dominating, he is influencing the price, then that supplier and me would be associated enterprises. That is 90% or more. And here, for buyer, goods or articles manufactured or processed by one enterprise are sold to the other enterprise or to persons specified by buyer, and prices and other conditions are influenced by such other enterprise. So here, who is influencing? That seller is, sorry, that buyer is influencing. So let's write down, and then we write down one example. So 7th and 8th. P limited influences price, and here P limited and Q limited are A's, and Q limited and R limited are A's. Are A's. Okay, I'll give you one example now. So A Limited sells goods of 80 lakhs to B Limited, whose total raw material consumption is 100 lakhs. Whose total raw material consumption? B Limited's. Now, are they AEs or not? It depends on who influences the price. Now, this influencing price, this is very subjective. So, assessee can take a stand that no, I'm not influencing price. But AO can say that no, you are influencing price, therefore you are AEs, and therefore transfer pricing provisions would apply. So here price is influenced by A Limited. Who is A Limited here? Supplier. And here A Limited, B Limited is the buyer. So if supplier is influencing price, then when they will be AEs? If supplier influences price and supplier is supplying 90% or more raw material requirement. Here only 80% raw material requirement is given. Therefore, in that case, they are not AEs. So in such situation, they are not AEs. But if B Limited is influencing the price, means buyer is influencing the price, then it will fall under this category. If buyer influences price, then percentage won't apply and they are deemed to be AEs. So it depends. If supplier is influencing price, then they will be AEs only if 90% or more of the raw material requirement of the buyer is supplied. But if buyer is influencing price and supplier is not supplying 80% or more or 90% or more, still they will be considered as AEs. Got it. So 7, 8 done. Then 9, 10, 11, 12. Quickly we'll finish. Ninth, manufacturing or processing of goods or article or business carried out by one enterprise is wholly dependent on use of intellectual property right of the other enterprise, of which the other enterprise is owner, or in respect of which other enterprises exclusive rights. So if my processing or my manufacturing depends on some processing of other person, like for example, this Serum Institute, we are very proud that this Covishield is manufactured by Serum Institute, but Serum Institute has not done research and development. Research and development is done in UK, Oxford. So what is Serum Institute doing? That manufacturing of Covishield, it is just whatever is the formula, using that it is manufacturing. If that Oxford UK based company says that no, we are not allowing you to manufacture, then the entire manufacturing of that Covishield will stop. Covaxin, which is developed in India, is totally research and development is also done in India. Whereas Covishield vaccine, which is for that coronavirus, that Covishield vaccine, the research is done in UK, and here we are only manufacturing. So here entire manufacturing of Serum Institute of India is dependent on, wholly dependent on use of that whatever a patent is there. That patent is owned by that Oxford UK company. So here that UK company and Indian company will be considered as AEs. Or another example can be that if I want to start manufacturing some two-wheelers, electric vehicles and all, but for that I am using technology of some foreign company or any other person. So without using that intellectual property right, I cannot do the manufacturing. Therefore, in that case, me and that person will be considered as AEs. Right on ninth. If manufacturing or processing of one person, if manufacturing or processing of one person is wholly dependent, it's not partly, wholly dependent on IPR of another person, IPR is intellectual property right of other person, then they are AEs. Then they are AEs. Example, example, Indian company manufacturing vehicles uses technology of some Korean company, So they are A's. Next, now 10th, 11th, 12th are simple ones. Where one enterprise is a firm AOP or BOI, the other enterprise holds not less than 10% interest in such firm AOP or BOI. So who holds interest in firm AOP BOI? Member or partner. So if you are a member or partner in AOP BOI or firm, then if you are holding 10% or more, then that member, partner and a firm AOP BOI will be considered as A's. So write down partner or member holding, partner or member holding 10% or more in firm AOP BOI, in firm AOP BOI. So that partner and firm member and AOP BOI will be considered as A's. Then one enterprise is controlled by individual. Other enterprise is also controlled by such individual or his relative, or jointly by such individual and relative. And one enterprise is controlled by HUF. The other enterprise is also is controlled by member of such HUF or relative of member or jointly by member and relative. So here let's write down, this is now point number 11 and 12. So here Mr. K is controlling. So here first enterprise is controlled by individual and other enterprise is also controlled by individual, relatives or jointly. And Mr. K or his relatives or they together controls Q Limited. So they are A's. They are A's. And KHF controls P Limited. And member of HF or their relatives or all of them together control Q Limited. So they will be considered as A's. As A's. So this, and last one, 13th is there exists between two enterprises any relationship of mutual interest as may be prescribed. So not prescribed. So basically 12 categories are there. So your homework for today is that go through all these categories properly. And then tomorrow we'll be doing domestic transfer pricing and then how to find out the ALP. That is crucial. Different methods are there that will continue tomorrow. Your homework would be please go through the this list once again and whatever you have written, do that. So because problems are asked on that or finding out whether they are A's or not can be part of the bigger problem. Done for today.